As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. We're pleased to have a returning guest today. Gregory Mannarino, founder and host of TradersChoice.net, has returned here to Reluctant Preppers. Thanks for joining us again here on Reluctant Preppers, Greg.
Great to be back. Thank you. Thanks for having me.
You have a wide following on TradersChoice.net of people who take your guidance and insight into the capital markets, stocks, and bonds. You've talked multiple times about the perils and the pitfalls of the bubble and the distortions that we are living under right now, and talked about betting against the debt and becoming your own central bank, and about the importance of precious metals, physical gold and silver in people's possessions. If you could first if we could start off here tonight with you talking to us about what direction you see the markets heading. We've certainly seen record-setting levels being hit on the Dow and a lot of pressure being placed on gold and silver recently. Can you talk to us about what you're seeing in the markets?
Well, what do we know? This is undoubtedly an environment of extremes. And it's going to get worse. But what that also means is we're going to see a few things happen. Let's start with this. So we already understand that we are existing in economic and financial fantasy land. This has not changed despite having a new president. What we can all be certain is going to happen beyond any shadow of any doubt. And this is not speculation, this is a fact, is global debt is going to get monumentally worse. Monumentally worse. I mean, just to put a perspective on where we are now and where we're going to be within a relatively short period of time, just to sustain our current situation, we're going to need to once again double the debt in less than a decade. Okay, is that sustainable? Can it even possibly happen? I think that remains to be seen. I believe that there is going to be a moment here where the debt-based economic model implodes on itself when we reach an absolute saturation point. We've also come to know that world central banks have been more than crafty in their ability to sustain the debt bubble. They've come up with every imaginable scheme to keep it going. Again, the system demands that more and more debt be borrowed into existence in perpetuity. It can never, ever stop. Once we stop acquiring or admit that we cannot acquire any more debt, we have a debt crisis and the system implodes. Now, I think, and I've been saying this for a long time, it's just a system that is doomed to fail at one particular time. I have absolutely given up on trying to pinpoint when it's going to end. We just know that it will. It will at one point. We also know this. The Federal Reserve, one of their main functions here is to transfer wealth from one group of people to another group of people. Again, they have been involved in a debt suppression cycle unlike anything that we have ever seen in world history. The middle class has been absolutely fleeced by the Federal Reserve's policy of keeping interest rates artificially low, not allowing the free market to determine fair value for debt. Understand, the only job of every market that you want to look at, whether it's the debt market, whether it's the currency market, which is also a unit of debt, whether it's the stock market, any market you want to look at, is to do one thing and one thing only. That is to determine fair value for assets, the actual price. Now, we're in an environment of extremes like we started off with. We have distortions across the spectrum of asset classes that is so hard to get your head around. That even myself that lives and breathes this, I've really given up on trying to even put that into a perspective. We just know that these distortions are enormous, and there is going to be a terrible price to pay when these things snap back to fair market value. Again, I'm not predicting when this is going to happen anymore. We know it is going to happen. The debt is in a bubble. It's the largest bubble that's ever been created in the history of the world. We know it's going to get worse, but there's going to be a breaking point. We already know. We hear it all the time. The debt can never be paid back. Okay, we know that, but people are still willing to put their cash in the debt market. You've got to have your head examined to do this. It's outrageous, but we can expect that to get much worse. So, again, what does all this mean in the grand scheme of things? We know the Federal Reserve is a serial bubble blower. They have reinflated the stock market, which is going higher, on the back of a debt bubble, which is truly epic, until this whole thing just decides we can't do this anymore. We have reached a saturation point with regard to the debt. The world still believes that we're not yet totally awash in debt, although we understand it's in a bubble. We understand it can never be paid back. I mean, these are the clear signs that there's something very, very wrong here. And there is no way any economy here, even in the United States, can grow to such a degree that we can do anything about this monumental debt problem. We can't grow out of it. It can't. There has to be some type of reset. So just fall back on the principles that have been my core values, if you want to call it that, my tenets since day one. Become your own central bank, bet against this debt. Again, because there exists inverse bubbles. The inverse bubbles, again, in my opinion, are the precious metals, none more so than physical silver.
On the point of physical silver, you've talked to us multiple times about why that is your preferred real asset. You're a real money enthusiast, a sound money enthusiast, but time after time you've talked, and we met at the Liberty Mastermind Symposium in Las Vegas, Nevada, and you were speaking there about that. Others were as well. But can you tell us about, again, especially for those who are new to this, why is physical silver truly a standout in terms of the promise that it offers people for a value through a coming collapse?
I think what's going to end up happening is this. When investors realize that the debt is worthless, it's not backed by anything, and it can never be paid back, I mean, just look at the situation that we are in right now. World central banks, and you are as aware of this, and your listeners, I am sure, more than anybody else, have done everything that they possibly can to keep interest rates low, which has been literally wiping out the wealth of the middle class here and transferring it to the upper echelon of society. What's going to happen here at one point, and I don't know what is the trigger, it could be some kind of a geopolitical event, or it could just be some investors who start to realize that the debt is worthless and it can never be paid back, and they're going to start running for the door. They're going to start dumping these things. And we've seen this without exception, at the top of every single bubble. There's just a little glimmer or a little rumor or a little something, some triggering event will end up sparking, because this is all going to start in the bond market. So I know everybody and their mother and their grandmother is fixated on what's going on here in the stock market, but that's not where people need to look. The bond market is going to tell people everything. And let me put a perspective on that just real quick. We had the market, since the election, the market's been in a screaming uptrend. I've been telling everyone how bullish I am on the stock market since that time. A lot of things have changed. I've been riding that wave up higher, doing my own trading. So all of my subscribers have been posting all my positions. And then lately, we've seen the market kind of, take a beating, and we were saying, the market's going down. We're going to get a 10% correction, 15, 20. I kept saying, no way, it's not going to happen. The clear sign was the bond market. The bond market was saying, I'm sorry, but this is not going to happen. We weren't seeing any kind of a sell-off here in the bond market. It was stabilizing, as a matter of fact. I did a video just yesterday where I told people watch out for certain dynamics to take place. For example, a minor sell-off here in the bond market, which would push yields higher. This happened today. I've been telling people to exactly how to play this market, and it has been working out. So forget the stock market, people. You got to start looking at the bond market, because that's when there's where the biggest bubble exists, period. So again, what starts any bubble or any run on an asset, whether it's the stock market or tulips or whatever you want to talk about, is a rumor or some type of a geopolitical event. But there is going to be a moment, and maybe it'll be when people realize we've reached a saturation point where they start dumping the debt. And then when one person does it, two people, two turns to four to eight, and this will start a cascade of events where people will run for the door. And what that will do, very simply, is cause interest rates to spike on their own rapidly. World central banks cannot go in there and buy all the debt. And this goes back to, okay, the powers that be. What will they do? If the Federal Reserve were to step in at that point and start buying all the debt out of money printed out of thin air or added to a digital screen, it would devalue the currency to such a degree it would become nearly worthless. So they're stuck. There is going to be a moment here when the free market, the actual market, dictates fair value. Right now, there is no price discovery mechanism whatsoever. It's the truth. With regard to any asset class, we are in financial fantasy land. But that does not mean that we can't profit from this. That does not mean that we can't get ourselves in the right spots. And that's what I think people need to focus on. Who cares? I mean, of course, there's going to be a terrible near or biblical moment when the debt bubble actually bursts. And I think a lot of your listeners are well prepared for something like that, or at least they should be. But for now, we need to use this scheme against them, use their own tools as a weapon against them. And this is what I do. This is why I'm out here trading this market here and converting those my profits into hard assets. Again, those are the inverse bubbles, the anti-debt. The anti-debt is gold, is silver, is maybe even lead, if you know what I mean. But this is the truth. We need to hold hard assets, period. And then that does not mean real estate, because real estate right now is in a very precarious situation. And how do we know that? Very, very simple. I mean, the signs are everywhere. When the average person is unable on an average salary to buy an average home, when things become out of reach from people that normal, average, everyday folks should be able to buy, you know you have a bubble. Okay? Home prices continue to rise, and this is putting a strain on the average person's ability to get them. So that tells me, and should tell all of you, that real estate is not where you want to be right now. Now, that does not mean that it's not going to go a little higher in the short run, because I get a lot of people, hey, Greg, isn't a home a hard asset? Well, it is. But at this particular time, in my opinion, and there are probably a lot of other guys who would agree with me, and some maybe won't, that housing prices, along with the stock market, are inflated. And why? Because the Federal Reserve has artificially suppressed interest rates, allowing distortions again to manifest themselves to a horrible degree across the spectrum of asset classes.
Yeah, we've been hearing some amazing pronouncements recently. In fact, an article just came out today declaring that the Dow is heading to 72,000, one prediction, and yet others have said that it's completely out of perspective to what the actual earnings are of companies. What is going on there, and why are physical metals lagging?
Well, there's many reasons for that. I would urge people to do a little research on their own here. But look at the Dow to gold ratio, and then once you look at the Dow to gold ratio, then you want to look at the silver to gold ratio, and then on top of all that, you want to look at the debt to the price of gold ratio. I mean, we should be realistically at this point here, a real price for gold would be way over probably $5,000 an ounce. And think of what that would mean for silver if the ratio were normalized at somewhere around 15 to 1. So That's why, I mean, I feel that these assets are massively undervalued. And I just look at basically one thing: the exploding global debt, which is only going to get worse. It's the nature of the animal. It has to get worse. And there are so many people that are actually brainwashed. They sit there and they listen to the mainstream financial channels and stuff and say, oh, we're going to pay off the debt. Oh, we're going to balance the budget. Bullshit. I'm sorry for the language, but it's the truth. They can't do this. If we were to do that, the system would not function. The system functions on the premise that debt will continually be added in greater and greater amounts. Look, the United States is the largest debtor nation in the history of the world. Most of its citizens, unfortunately, probably most of the people that are listening to this, are in debt up to their eyeballs. The number one thing you need to do is get out of debt yourself. You don't need to follow the macro model that our country has followed into the pit and despair of debt, which is a crushing weight. You got to get yourself out of debt, period. And what does that mean? There are so many ways to do this here. You know, I even had a publication about this a while back. If you have an account that is unsecured with regard to the debt, like a credit card, look, I know people hate to hear this, but you do not have to pay it back. It's the truth. Corporations renegotiate their debt every single day. Okay, every day debt is renegotiated. But Lord, freak out. People go nuts when you say you don't have to pay it back. You don't. The cash never existed anyway. It was borrowed into existence when you took out the account. So if you cannot afford to pay that account, you cannot let these people scare you. You renegotiate the debt. It can be done. So number one rule, get yourself out of debt. Number two rule, bet against the debt. Become your own central bank. Hold a hard asset. This is what people need to do. Get themselves out of the in-the-box thinking that they have to follow along like sheep. You do not have to follow along like sheep. And let them control your life and every aspect of your life by holding a credit score in front of you, by holding a piece of paper in front of you telling you that this is real money. I think your followers get it probably better than most, and I am certain that they'll agree. But people need to understand that that's what they need to do, and they need to do it now. It's just so important. Don't fall into the trap. If you're starting to fall into the debt trap, you're walking down a very dangerous path. Get yourself out of debt. Do what you got to do to get yourself out of debt, period.
There's an aspect of that we really would like to touch with you, and that's about the whole next generation of young people coming up. A lot of them are feeling that they can't get a proper job that's going to really provide for their family unless they get a college education. But colleges, the cost of higher education is completely decoupling from the our average earning, to where when we visited a college with our young people, it was just almost all of the parent orientation weekend was all about the financial aspects, how you can get this loan, how you can get that loan, how you can apply for this and apply for that. It seemed it was all about the financing rather than about the academics.
The government's got to get out of the way. The government is the reason why education is going up and will continue to go up. It's a very sad state of affairs. You're absolutely right. Look, I went to a private college. I was in debt beyond belief with regard to student loans. I paid them all off. It was not easy. But it's a terrible burden that's being placed on people here. And I'll tell you something personally. I think people going to college today is probably a mistake. I think people need to start looking into trades, do something else here. I was talking to a young man today who I happened to meet about the same thing. He was very conflicted as to what he should do. But I don't think that college is for everyone. I think the trades are really something that people need to start looking into. Again, this is just my opinion, but I think it will ring true if a lot of people think about it. You come out of school today, you come out of college today, and unless you have a master's or a doctorate, what are you going to do with your bachelor's degree? Probably nothing. You're going to be, how many people have bachelor's degrees and are paying these loans back, or at least trying, and can't even get a job? I think we've reached the saturation point with regards to people holding a good old-fashioned bachelor's degree. So, I mean, my advice to, I think, a younger person today would be probably steer clear of that and start looking into a trade.
Just continuing that personal anecdote a little bit further, that parents' orientation weekend that we went to at the university with our young person, and this is our son was at the very top of the academic pinnacle. You know, he was a national merit scholar, extremely high SAT scores, that sort of thing. And yet the pressure from the college was, you know, they would give limited scholarships, and they were all about these government loan programs. And it made me think back to a episode of All in the Family, starring, you know, Archie Bunker and that sort of thing, Carol O'Connor, and he was trying to explain to, there were these flim-flam sheet metal salesmen that came out to put siding, to try to convince people. They're really con artists trying to convince people to buy siding for their houses. They said, oh yeah, we're from the, we want to put up this siding so that it can be in the National Geographic magazine. They can take pictures of your home. It'll be a show home. We actually give you the siding for free. All you got to do is just defray some of the expenses that we have and this and that. And when the guy finally got Archie Bunker to sign the forms and he left, and Edith comes in and Archie says, "So Edith, these guys, they're going to do us a great thing. We're going to get into National Geographic magazine." She says, "Oh, Archie, really?" He says, "Yeah." He says, "But." She said, "No, I think maybe they're salesmen." He said, No, they're not salesmen at all." But he says, "But if they're salesmen," he says, "why do I feel like I just bought something?" And that was the experience I had up there at the college, was they weren't talking about and focusing on academics. They were talking about the financing. And that's what it seemed to be all about. And it just seemed like a whole distortion. And you get this whole generation that's going to be starting out life saddled with debt and stress that comes from debt, and be debt slaves. You know, we talk about fiat slavery. They're debt slaves from the get-go.
Of course, you know what? It's a very sad state of affairs across this. Again, no one cares. We live in a society today where people have lost their moral compass, and this goes for these kinds of schools that you're talking. Look, they need the cash to function. They understand the government's there and is going to give it to them if some poor soul goes and signs on the dotted line. But I think this type of behavior has to be avoided like the plague. And it's sucked in way too many people already. It's hurt way too many people already. And obviously, I mean, it's just so plain to see that it's the wrong direction for the vast majority of people who are probably attending these institutions, unless they're planning on to becoming doctors or nurses or something along those kind of lines, or you can't do anything today with a bachelor's degree anyway. You can't do anything with it. You're kind of stuck. You have to go on to a higher level of education. And what does that mean? That means even more debt. It's just outrageous. It really is, and it's just so sad. And I hope people start to wake up. I really do. I don't think they're going to, for the most part, because people, when they get stuck, you know this better than anybody. When people get stuck in that paradigm, they just feel like they're like sheep led to the slaughter, and they line up willingly with big smiles on their faces, marching, off the cliff. It's incredible. But this is what they want. They need people to think a certain way they do not like. And they won't tolerate, and they will try to destroy anybody who thinks outside the box, because you're going against, the normal way, the quote unquote normal way of thinking, the way that keeps everyone in line. And I would like to think that shows like yours are enlightening people, and I'm sure that that's exactly what's happening. I think we're starting to see some people wake up. Look, you and I have been out here for a while. I've been out here for years now talking about this stuff, and I've heard from thousands of people over the years that I think have woken up, or at least, to what's really going on here. And it's just so twisted and frankly frightening. And I'll say this, just going back to how we started this whole thing off, there is no doubt, none whatsoever, that the cycles that we're in now are going to end with regard to the debt cycle, with regard to the stock market cycle. All of this is going to correct to a fair value. And we are going to witness yet again a massive wealth transfer, massive. All the people that, been throwing their cash into the market, throwing all their money into their 401ks, loving the way they're looking today because the market's at all-time highs here. and is probably going higher, at least for now. They're going to do the same exact thing they did last time. They're going to watch the market melt away into oblivion, and they're going to hold on to it, because when they get on the phone with whoever's managing their 401k, they're going to say, oh, don't worry about it, just hold on, and they're going to get wiped out. And that's what they, I mean, this is what the major banks are counting on. And, it's sad to say, but what's going to end up happening again is people that are smart enough to know how to take advantage of that are going to do it. And I'm going to be honest with every single person that's listening. I am one of those people. This is why I am telling people and trying to warn them that, look, more money is made in this market from people like myself when it falls than when it rises, because it falls faster than it rises. So I can promise you, I'm going to be just like one of these Wall Street banks. When I see this market roll, I'm going to be getting there buying puts against the whole damn thing. And what's going to happen is wealth that people have acquired over years is going to be transferred legally. It's a legal theft on a grand scale to people that know how to do it. And it's funny because people that are sitting here listening to this right now can also do the same thing, but they think it's too hard. They think, well, I can't possibly do that. Oh, I can't get involved in it because it's all rigged. Yeah, it's all rigged. But if you know how the game is going to end, then it is not rigged. Then you know exactly what you should be doing. I don't know. I know I'm sounding kind of blunt here, but I want people to understand the gravity of their situation. They're sitting there right now all smiling, looking at their 401k plan gaining 10, 20%, whatever it might be over the last several months. But I can promise you, at one point, when you're all gleeful, and when you're at your most gleeful point, that's when this entire thing is going to come down, because it's all being built upon a house of cards that is sitting on a pool of gasoline. And it's going to ignite. When? I have no idea. But I'm watching the signs, and I'm telling everyone what they should do. Forget the stock market, people. You're looking in the wrong place. Look at the bond market. Specifically, watch the 10-year yield. When we start seeing that yield there rise on its own rapidly, then we know we're going to be in for some trouble here. And I'm not saying we're there now. We're probably a way off from that. But it is going to happen, whether it's tomorrow, next week, or next month. It's going to happen, because every single bubble does one thing. They all burst. And why do they burst? Because they rise above a level that can be sustained by any means. So what world central banks have been doing is everything humanly possible and inhumanly possible to keep the debt suspended. But there's going to be a breaking point. When it is or what causes it, I don't know. No one knows. But it's going to happen.
Well, Greg, before we let you go, if our listeners are interested in finding out more of your work and more of your commentary, where can they find you on the web?
Absolutely. Go to my website, traderschoice.net. I have a nice free brief that people can download. It's really free. There's no catches. Go to my website, download it. If you're even thinking in the most remote sense of getting involved in the market, or you even want to know how it works, just download this. It's absolutely free. I don't ask for anything. I hope people take advantage of it. Again, it's available from my website, traderschoice.net.
Well, once again, Gregory Mannarino, founder and host of traderschoice.net. Thanks for joining us here on Reluctant Preppers.
Great talk. Thank you.